I'm Arundhati Ramnan, and here are the headlines that we're tracking for you this evening. Stock markets fall for the third straight session. Sensex falls over 500 points and Nifty loses nearly 150 points. Rupee weakens marginally against the dollar to move closer to the 82 mark.
We took that view that the time has come now that we need to remove this export duty.
The industry gives a thumbs up to the government's decision to scrap export duty on iron ore and several steel products. Minister Jyotiraditya Scindia says that the removal of export duty will lead to a new era of growth for the steel industry. The union government could reassess the national monetization pipeline goal, make it more realistic. Sources say government may reassess the accruals, may refocus on monetizing idle assets instead of running ones. The Finance Ministry tells a parliamentary panel that the timeline for becoming a $5 trillion economy has been postponed by 2 years to 2027 due to the pandemic. Adds that the real GDP growth is expected to hover around the 6.5% to 7% mark this fiscal, and inflation would enter the 2 to 6% tolerance band by the fourth quarter. Former bureaucrat Arun Goel takes charge as election commissioner, fills the third and final post that had been lying vacant for 6 months. Goel is next in line to succeed CEC Rajiv Kumar when he demits office in 2025. Mixed reactions to the COP27 climate summit as the world's biggest economies make fresh commitments to cut greenhouse gas emissions. Developed nations agree to compensate poorer countries suffering due to climate change, but many world leaders call this a small step towards climate justice. In a surprise announcement, Bob Iger returns as the CEO of Disney 11 months after leaving the company. Bob Chapek exits Disney after a tumultuous period at the helm. Iger will help the company's board find a new successor. Former U.S. President Donald Trump snubs Twitter after Elon Musk announces the reactivation of his account. More than 15 million Twitter users voted in a poll conducted by Elon Musk, where nearly 52% favored the return of Trump. Those were the headlines that we're tracking for you this evening, but straight to the day's market action. The Lal Street saw red for the third straight session amid growth concerns. Nifty and Sensex fell close to 1%, with the Nifty ending below the 18,200 mark. But broader markets fared better but ended mildly lower. CNBC-TV18 Newsbreak confirmed the government has withdrawn export duties on most steel and iron ore products that were levied in May this year. Now, the Steel Ministry says that the rollback decision was taken on the back of a steep fall in steel exports in October. 15% duty on export of steel products and stainless has been scrapped. 45% duty on iron ore pellets has been scrapped. Duty on exports of low-grade iron ore lumps have been scrapped as well. However, high-grade iron ore lumps will attract a duty of 30%. Steel Minister Jyotiraditya Scindia told Shireen Bhan that the time was right to remove export duty. Take a look.
Multiple pressures on the steel industry with regard to pricing. And so we were dynamically monitoring that. And I had committed to the steel industry that we will take a view one way or the other in the month of November. And in the month of November, through our multiple deliberations with the Coal and Mines Ministry, with the Home Ministry, with the Commerce and Industry Ministry, and finally with the Finance Ministry, we took that view that the time has come now that we need to remove this export duty. If anything has kept the steel sector going as far as India is concerned, with a capacity of almost 150 million tons per annum and a production of almost 121 million tons per annum, it's actually the domestic demand.
Meanwhile, the Confederation of Indian Industry has put forth its first list of suggestions. Their key demands include reducing the income tax rates to boost consumption, reducing the 28% GST on select consumer durables to increase demand, raise capital spending to 3.3 to 3.4% of GDP in FY24 from the current 2.9%. The CII has also suggested that no arrest or detention should take place in civil cases unless criminalization in business has been proved beyond a doubt. Now, the CII has also sought withdrawal of windfall gain tax or special additional excise duty on domestic oil production. The CII wants the government to target higher asset monetization receipts in the FY24 budget with a focus on railways and telecom sectors. It further suggests that the government may consider a further stake sale in LIC. It also wants the government to avoid introducing any new subsidy schemes apart from the PLI schemes. Now, the CII also wants the government to rationalize income tax slabs and rates for individuals at the lower end.
We have recommended that as far as the urban lower income consumer is concerned, we suggest rationalizing personal income tax slabs and rates at this lower end so that we can give them that much needed support, keeping in mind inflation as well, and increase their disposable income. In the same way, as far as rural India is concerned, we have suggested that as the government continues to focus on its capex investment, we would like to see a significant share of that going into rural capex so that there is rural job creation, which eventually will lead to rural consumption.
Meanwhile, HUL CEO and MD Sanjeev Mehta believes if India manages to end the year with lower inflation and a growth rate of 7%, then it would amount to a phenomenal performance by the government. My colleague Shilpa Ranipeta caught up with Sanjeev Mehta. Here's a slice of that conversation.
You know, I think first we must compliment the government, the way they have navigated the crisis. And today India is an outlier. And I believe if we can end the year with a magical digit of 7%, that is inflation in the vicinity of 7% and growth in the vicinity of 7%, then it would be a phenomenal performance by the government. Yeah? So if we look at it from a lens of what the government should do, I think the first is the focus on containing inflation and ensuring that the growth of the economy continues. That should not go away. In the last budget, there was a 35% increase in the capex, and till the private sector capital expenditure kicks in, I think it's very important for us that the public sector, the government capex continues on an upward momentum, because that's so critical for the country, and that will then crowd in the private capex. The second is every government has a role to play that people at the bottom of pyramid are taken care of. So the government has done a phenomenal job of giving free food grains and also having a outlay on Manrega. Whoever needs it, they can deploy that. That is something I believe needs to continue if the inflation remains at an elevated level.
When can we expect a revival in the rural economy?
You know, there has to be a trigger, and one of the trigger will be when the commodity prices start softening.
Correct.
And when they start softening, I see no reason why the volumes won't come back.
The Finance Ministry tells a parliamentary panel that the timeline for becoming a $5 trillion economy has been postponed by 2 years to 2027 due to the pandemic. Now, adds that the real GDP growth is expected to hover around the 6.5% to 7% mark this fiscal, and inflation would enter the 2 to 6% tolerance band by the fourth quarter. Parikshit Luthra is here with all of those details. Parikshit?
The IMF recently lowered its global growth forecast for next year to 2.7%. Based on key economic indicators, the IMF has said the outlook for G20 economies is a gloomy one. High inflation, weakening of the Chinese economy, and the Ukraine-Russia war are weighing down the world economy. Amid global headwinds, the Parliamentary Committee on Finance today sought views from the Finance Ministry and Niti Aayog on the roadmap to a $5 trillion economy. So what did the government tell the parliamentary panel? Top government officials have briefed the parliamentary panel on India's roadmap for a $5 trillion economy. Sources say the government has said the real GDP growth is expected to be between 6.5% to 7% in FY23. Inflation to enter tolerance band of 2 to 6% by Q4 of this fiscal. Urban unemployment rate, which is at 7.6%, to fall further by end of fiscal, and private capex cycle could commence in FY24. Among the headwinds to India's growth path, Pressure on currencies to depreciate against the dollar will persist into 2023. Loss of world output and trade could impact India's growth. Continued high crude prices will dilute domestic stimulus to growth, and food inflation could worsen due to climatic conditions. Now, the timeline for India becoming a $5 trillion economy has to be postponed because India has lost 2 years of growth. The $5 trillion target can be achieved by 2026-2027. For this, 6.5% annual growth rate is needed, and inflation should be below 6% and US inflation closer to 3%. Now, what are the key reforms needed to cross the $5 trillion target by 2026-27? Officials have told the parliamentary panel that on the agriculture side, you need land consolidation, facilitating crop diversification away from food grains into edible oils. On the power side, increasing user charges, improving DISCOM viability and reliability of affordable power for MSMEs, improve capacity of state governments to undertake local infra spending, reduce compliance burden on MSMEs from state, local and union governments, focus on asset monetization and privatization, reduction of government debt stock and lower cost of capital. Now, these were some of the key reforms that the Finance Ministry briefed the parliamentary panel about, which could really help India's transition to a $5 trillion economy. Back to you.
Right, Parikshit. Thank you so much for those details. Now, the union government could reassess the national monetization pipeline goal, make it more realistic. Sources say the government may reassess the accruals, may refocus on monetizing idle assets instead of running ones. Sapna Das joins us with the latest. Sapna?
That's right. What we're getting to pick up is the fact that some kind of rejig within the national monetization pipeline is very much likely. This pipeline is worth around 6 lakh odd crores. That has been the government's aim. It was launched way back in September 2021. But some of the excitement emanating from this pipeline and the monetization of assets, that seems to have kind of, withered away, so to speak. So we're given to understand that a rejig is on the cards, trying to make the pipeline and its goals more more realistic. Probably within that, I think the government, rather the centre, will also look at it in terms of how much will be accruing to them, because once you have a monetization pipeline, it's a three-way sharing of resources between the state governments, the companies, of course, which are doing the monetization, and some bit of it comes to the centre. So all of that is going to be part of this realignment that we are talking about. Of course, in terms of the 6 lakh crore number, that looks a bit fancy and a bit difficult to meet, but at the moment, at least, the centre will be sticking to that. Also, in terms of the laggards, well, railways were supposed to be the second largest contributor to the national monetization pipeline. It has not really met that goal, so to speak. Of course, it's roads that has been the largest contributor. Surprisingly enough, coal has also come up fast, but here lies in the problem. Basically, the monetization pipeline was meant to, invigorate life into those assets which have been lying idle, and not to kind of just talk about assets which are already running, and that's what is happening. So probably all the dead weight will be shaken off at some point in time. Maybe we can see some announcements coming up in the budget, so to speak. Last year, we do know that the monetization aim was met. It was somewhere around 88,000 crores. I think the government exceeded that. This year, the aim is around 1.62 lakh crore. We are given to understand anywhere between 1.25 to 1.50 lakh crore would be coming in. But again, the question remains, how much of that will come to the centre? So all of this is going to form part of the larger realignment that we are talking about, and some announcements likely in the budget.
Right, Sapna. Many thanks for those details. Now, a chartered accountant today has the role to drive businesses to think about sustainability in a strategic way. That's the word coming in from Julia Penny, the Deputy President of Institute of Chartered Accountants in England and Wales. She spoke to Lata Venkatesh on the sidelines of the World Congress of Accountants. Here's a slice of that conversation.
For chartered accountants in England and Wales, we have, as part of our strategy, to build that trust, to strengthen trust in the profession. And actually, I think it links very closely with the other part of the World Congress theme, which is sustainability. Because one of the things that chartered accountants have a role wherever they are in the world is to be able to drive businesses to think about sustainability, to report on sustainability, to strategically move towards a more sustainable future. And I think that is one way in which we can build trust and restore that picture for the world to be confident.
It's a little difficult because the chartered accountant has to be a whistleblower to the paymaster, bite the hand that feeds. So are there any ground rules your profession will suggest in the Congress?
Yes, I mean, it is always a complex situation, and regulators around the world put in rules to make sure that you are as independent as you can be, given that you are being paid. But one of the core things for us is the training in ethics and integrity that takes place both when chartered accountants are students, but also as they come through as professionals. We have continuing professional education requirements, and we emphasize you have to be ethical. You have to say no if no is the answer. You have to say yes if yes is the answer, from an ethical perspective. And so this is what we strongly emphasize in all our training in order to overcome those natural biases because of the way that the system works.
No, I agree with you. It's not as if ethical questions don't rise in journalism. They do. Well, let me come to the other part of the World Congress theme, sustainability or sustenance. That will involve a lot of non-financial disclosures, isn't it? Is the profession trained?
Yes. Well, the profession is becoming trained, so we're not there yet. We've all seen a very big acceleration in just the last few years in the understanding that we need to act very quickly on climate change and on other issues covered in the UN Sustainable Development Goals. And this is part of the ICAEW strategy. It's part of Chartered Accountants' worldwide strategy. That's the organisation, 1.8 million members, many of them will be obviously at the Congress. And so it's key for the Congress. So what we're trying to make sure is that we do provide that education. ICAEW has recently launched a sustainability certificate for those that need to increase their education in this area. And the exams around the world and in the UK are including sustainability so that both new and existing members of the profession understand what it's all about. So we're not there because not everybody will have had that education yet, but there's a lot being done.
On that note, it is time for us to head into a short break. But coming up next, India recently amended its Juvenile Justice Act to speed up the child adoption process, but the changes aimed at shortening timelines have been slow to deliver results. A special report on the other side. Stay tuned. CNBC TV18. Now, India recently amended its Juvenile Justice Act to speed up the child adoption process, but the changes aimed at shortening timelines have been slow to deliver results. Now, as we hit the middle of November, which is globally celebrated as International Adoption Month, CNBC TV18's Jasilia K takes stock of India's track record when it comes to adoption and the hurdles at play. Take a look.
Let's go, friends. Let's go.
Hello everyone and welcome to my channel.
YouTube content creator Sahana successfully adopted a child in 2017. But the process was not simple or quick. After a 2-year wait, Sahana and her husband Rishu Kumar brought home their baby girl and grew their family.
Decided in 2016 June that when we wanted to adopt. So then when we searched on the net, we found CARA, that is Central Adoption Resource Authority. I understood, okay, now we have to register, so we had a very good opportunity to go and meet the counselors in person. So we could actually meet and, talk to them, clear all our doubts, all our perceptions.
Experts say that the adoption process takes time because of the checks and balances involved in ensuring the child finds a good, stable and nurturing permanent home. But the COVID-19 pandemic and ensuing lockdowns threw a wrench in the process. Timelines widened to between 3 and 4 years. Pending adoption cases across various family courts have risen from 629 in July 2018 to over 900 cases as of September 2022. In an effort to speed up the process, the government amended the Juvenile Justice Act 2015. These changes allowed even district magistrate courts to hear and approve adoption applications and tried to shorten timelines.
The amendment have happened in 2021 and the adoption rules have been come out in 2022. There are cases pendency in the courts for almost like 2 years, 3 years. These new change, if we welcome with a positive note, it is definitely going to help us because the stipulated time period that has been given is like within 60 days the case need to be disposed of.
But in reality, the change has been slow. Experts say adoption cases are often not accorded priority in district courts, where a district magistrate already has a full plate, being responsible for maintaining law and order, land and revenue administration, disaster management, general administration, and implementing government schemes and programs in their district. That's not good news for the 31 million Indian children that UNICEF says are orphans or have been abandoned, over 227,000 of whom live in childcare institutions. The COVID-19 pandemic is seen as a big contributor to this number, though estimates differ. A report by Lancet in February 2022 said 19 lakh Indian children have lost their primary caregivers due to COVID-19. The Ministry of Women and Child Development, however, says only 1.54 lakh such children have been registered with it. Of this number, 1.42 lakh children have a single parent, 492 were registered as abandoned, and 10,386 children have lost both parents. Experts fear many of these children, especially COVID orphans, may be at risk of falling through the cracks.
After COVID, we heard so many numbers of children getting orphaned due to COVID issues, and there are so many children who had no support, but very few have come up or turned into the institutional care. Of course, there are reasons because of the PM cares or the state level alimonies that has been offered to them, but where they are ending up, like are they into the safe nets? So these also need to be studied. Only providing money or monetary support is not enough.
Adoption numbers, meanwhile, are nowhere close to covering these figures. Data from the Central Adoption Resource Authority shows that total adoptions have not risen above 5,000 a year for over a decade and have even slipped a little in the last few years. Some of this is being attributed to improved in vitro fertilization technology, societal pressure that emphasizes biological children over adoption, and a pickup in avenues like surrogacy. Then there are people who are disheartened by the long process or those who fall for schemes that promise to circumvent the process. And these deny thousands of children a happy home. In Mumbai, with Jessilia K., Arundhati Ramanan. And with that, it is a wrap on our special broadcast. Don't go anywhere. News and updates continue right here on CNBC-TV18. Stay tuned.